Hi there guys, it's Joel here from Aussie Chart Trends. Today's market update is for the week ending Friday the 4th of January 2013. In today's update we're going to check out the smp500 and then we're going to take a look at the asx200. Before we get into today's update, I just need to remind everyone that aussiecharttrends.com.au and this video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as any form of investment advice. I'm not a licensed professional. You need to make your own decisions regarding your investments. I'm just here to help anyone searching for a practical direction in today's markets. Firstly, looking at the hourly chart here of the S&P 500, we've been looking at this inverted head and shoulders pattern now for some time. For those people who are new to watching these videos, I just need to state that we have a left shoulder here, a head, a right shoulder with a handle breakout. What we do in this situation is we measure the depth of this pattern from the head all the way up to the neckline, around that 1435 area, and we add that onto where the market has broken out, and we have an expected target, a minimum expected target of around that 1525 or 1530 area that we should encounter in the following months ahead. Now, as you can see, after we did break out above this neckline, we ran into resistance from our triple top formation. We came back down, back tested this 1435 area, and the textbook does say that this is an area where you would buy and then the market should take on up to the upside. Now, as you can see here, we had some terrible fundamental news come out about the debt ceiling in America and the fiscal cliff business. Hence, we had a lot of volatility in the market. In fact, we broke below an area there around that 1415 area, which was a level underneath our left shoulder over here. Usually if you break an area of support that surpasses the left shoulder, you would call this a failed inverted head and shoulders pattern. But the fact that we're able to identify this bottom line here, drawn underneath the bottoms of our triple top formation, which is just over here, you can see that we had a few levels there of support. That there was an area that was able to hold the markets up, and the fact that we stopped here, I really did question why the market stopped here and that we didn't just head down to our next level of support in the 1390s. Beside that, we had some really good news come out of the States, and we closed straight above that 1435 level. 2 days later, we were up into the 1460s. So it's quite amazing how sometimes the fundamentals will blow out the technicals there for a little bit. But you can see though in this rare circumstance that the markets did get blown underneath that 1415 area, but we were able to get back over it. Now if you have a look back to a chart of the S&P 500 in early 2011, when all the European crisis started, we had a very similar looking pattern to this one here, where it looked as if the markets didn't really know what was going on there, and it was impossible to chart that market. So that the very fact that this week in the S&P that we've seen this massive gap up to the upside, and then we've seen for the rest of the week just these small moves to the upside, I would say that this is a bear flag pattern. And there is an old saying that a flag flies at half mast. This would be our flag pattern, and we probably expect some weakness in early trade of next week. Even if we came back down to retest that 1450 level, it wouldn't surprise me. So guys, we're still on target now for that 1520, 1530 level, and let's just keep our eye on this market. If we have a quick look on the daily chart, and we have a look here at the head and shoulders top pattern that we had here in 2011. Now you'll see here the head of this pattern. I've drawn a line over the peak here, and if we extend that out over the head and shoulders topping pattern that we had there in March of 2012, and then we further extend that line out somewhere there through the middle of our triple top formation, you'll see that the S&P 500 ran into an area of resistance there around that 1467 area on Friday. So the fact that we stopped at this area doesn't really surprise me much. Let's move on to the asx200. Looking on the daily chart here of the asx200, This week on Thursday's video, we're discussing this bottom line here. Now, as you can see, it acted as support a number of times, and then after we broke down, we rallied on up to backtest this line. And funny enough, that's right at the apex of this symmetrical triangle pattern. But the fact that the asx200 came up to the apex of this pattern and then resisted down tells me that a lot of people who bought at these peaks over here and rode out all of this volatility, they were able to break even, and hence we've seen that little bit of a push down in the markets. Now, ever since, we've seen this steep diagonal level of ascent all the way up to this blue line again. Now, on Thursday's trade, we actually got through this overhead resistance level, and then on Friday we closed right on this line. So it'd be very interesting to see in the coming week if we can stay above this area. If we do break our bottom channel line, as discussed on the hourly chart as well, there's something that we have to reconsider as to finding levels of support there. I drew two new trend lines on the chart. This is a 5-year chart going back to all the way back to the financial crisis. As you can see though, that the asx200 is bound between this top line here and this bottom line here. Now, if we do get enough steam to get up over this blue ascending line we were just talking about, well, it's very possible that we could get up to around that 4,850 level and tackle this overhead resistance area. Mind you though, every time that we have encountered this level of resistance, the market has been pushed back down. So I would say it would be a fairly tough time getting over this area, but we'll just have to deal with it if and when we get to this area here. The other thing I mentioned this week was if we were able to get over this overhead resistance area, around that 4,800, 4,850 area, it is a descending line, so it is a bit hard to state where the market will break out above this area if we can get up there. That we may be looking at an inverted head and shoulders pattern, left shoulder here, a head, a right shoulder with our breakout. And guys, that would send the markets up into a frenzy around that 5,150 area. But we do need to keep our eye on the short-term support and resistance levels in the meantime. Let's take a look now on the hourly chart and see what's happened this week. Looking here on the hourly chart of the asx200, this week we've been watching the market come up between these two green lines here, and guys, there's nothing been stopping this market at all. We've headed on up to our minimum expected target of our inverted head and shoulders pattern. Now that's where we had a left shoulder here, a head, a right shoulder with our handle breakout. Now we measured the depth of this pattern and we added this onto where the market broke out, and as you can see, we met that target exactly on Thursday of this week. So where do we go from this point forward? Well guys, we don't really have any patterns to tell us where we're going to head from this point forward, but we do need just to keep our eye on this channel. One thing that I will mention is that when you have a channel that's rising up like this and the market exceeds past the peak, you'd expect a bit of a sell-off, because as you can see, that area there was a bit of impulsive buying, and then the markets proceeded to head down a bit. So it wouldn't surprise me if we came back down to test this level of rising support on our bottom green channel line. That pretty much wraps up today's market update. I hope you guys are enjoying the updates, and I'll be back on Monday with a free daily market update. Thanks very much for your support, and thanks for watching.